You're welcome to the Policy Council. This is Opeyemi Agbaje. Today we take another review of the global and Nigerian economy with one of the best in the field. Enjoy the program. You're welcome back. It's still the Policy Council, and my guest is well known. Is the notable economist Bismarck Rewane, CEO of financial derivatives company. Bismarck, you're welcome once again to the Policy. Must be I think you've obliged us with your presence a few times. Thank you very much for that. Let's start with a review of one or two issues from the global space. I'm interested in what is beginning to look like U.S. dysfunction. The political system doesn't seem to work. We can't have deals. Government shut down. Debt ceiling. We're almost at the brink. Everybody's threatening a downgrade before we strike a deal. What's your view about the direction of the U.S. political economy?
No, I think the U.S. is a highly polarized society at this point in time. So you have the minority groups, you have the African Americans, you have the Latinos, you have the white Caucasian communities, and therefore democracy is about consensus and building consensus around groups. Because the extreme groups versus the moderates are building around policy, politics, and markets, you'll find that this is beginning to play out. But in the end, the establishment, the interest of the establishment must always prevail. And so I think there's a lot of theatrics rather than actual...
Playing to the base so that your base will be happy.
Absolutely, because there's an election in 2014, November, midterm election. And that's critical. The midterm election in the last term of a president is very important. The president's legacy depends on that. The Obama presidency has not been unable to deliver on many of its fundamental policies because of the division in America and the polarization of the system. It's also about the next election in 2016. So you see that in that context, but typically the United States has gone through its structural changes. There's what you call tensions and shifts taking place at the same time. And therefore, the U.S. economy, we've seen unemployment down to about 7%. We've seen productivity higher. We've seen consumer confidence. So whenever you look at the U.S. economy, you have to look at it in the context of, one, the financial system, and two, the economic system. Aggregate output is expected in 2014 to go to 3.6%. That's the highest level in many years. They've pulled out of Iraq, they're pulling out of Afghanistan, and quite frankly, the price of oil, America is now a major oil producer. The shale fracking revolution is also playing in. So America's economic destiny
looks stronger than the theatrics suggest.
Absolutely. It's based on three fundamental pillars. One, low price of energy. Two, competitiveness of its skill and manpower. And three, confidence of its consumer base. So those are the three things that are going to be driving America. So if you look at the global economy in 2014, there'll be three major players. One, the United States. Two, the European Union. And three, Japan. Between these three countries, they will be investing in emerging markets, including Nigeria, about $1 trillion. That's the first time they've done this in the past 5-10 years. And so there's a lot of upside for the global economy. However, because one of the fundamental assumptions and objectives is lower energy prices, that begins to become an exogenous risk to countries like Nigeria.
Let me take a quick comment on two other things. Still on the U.S., from Ben Bernanke to Janet Yellen, the debate over tapering off of the quantitative easing and all of that. How do you think it will play out?
No, the reality is that they belong to the same school of thought. They are both monetarists. They all believe that you need accommodative monetary stance to actually serve as a catalyst for growth. However, fundamental economic theory would tell you that once you increase the quantity of money, theoretically, prices should increase. But you are seeing inflation at about 1.2%, which is fundamentally very low. So what we will see is as quantitative easing begins to get tapered because inflationary pressures are beginning to manifest. A lot of people have invested in assets, financial instruments, and now want to convert that into real assets. Then the pressure begins to come on prices. All of that will happen in 2014, 2015. So if interest rates increase in advanced economies, if advanced economies actually begin to base their economic destiny on lower energy, so it does two things for developing economies, especially Nigeria. One, because a lot of emerging market money has come, advanced economy money has come into Africa, including Nigeria, there will be a slowdown in that money, and if anything, there will be a reversal of flows. Two, energy. Right? So in 2014, we see lower energy prices. Not that sharply lower, but lower enough to threaten your macroeconomic stability. And thirdly, global commodity prices are expected to fall. So the three segments of the global economy: one, the producer economies, which are the people that produce raw materials in Africa; the manufacturing economy, which are those who manufacture it in Asia; and the service economy, which is in advanced economies, will be shifting, and that's why we're calling tensions and trends. So those are the things that will shape the global economy, and all of them, because of interrelatedness and global integration, you will find that the impact of one will have a dramatic impact on the other.
Fantastic. Well, I hope our policy makers are listening. Let's take a short time out. I'm with Bismarck Rewane. We'll be right back. You're welcome back. It's the Policy Council. I'm speaking with Bismarck Rewane, Economist, CEO, Financial Derivatives. Bismarck, let's come back home and deal with this vexed issue of the central bank's 50% cash reserve requirement on public sector deposits. It's had multiple impacts. Some will say negative. Some will say, well, let's look to the objective, maybe possible. What's your assessment of that policy and its implications?
It's a question of what is fundamentally wrong with the financial system in Nigeria. You have a situation in Nigeria where the government banks, either by default, the government started banking with the private banking system. That is not allowed and shouldn't be allowed. However, because the banking system is addicted to government money, what you need to do is to wane them of it and do it gradually and put the banking system into rehab. Basically, they're in rehabilitation right now. So you've taken 50% and they're already gasping. So what's going to happen is that there will be an attempt to take some more. But
you're suggesting that the CBN will try to go even higher than 50%?
Yes, they would do that. Time frame I do not know. But that's pretty obvious that that's the way it's going to go until such a time that...
And it can become 100%.
Therefore, but the government, this is a highly fiscally dominant economy. So the government transacts a lot of transactions. So even if you take government money out of the system, since the government carries out a lot of transactions, the money comes back in, but it doesn't come back as deposits.
As bank deposits.
Right. So using the float of government resources as the base for your lending activity is not only unhealthy, but it's also dangerous. Therefore, we have to back that out of the system and see what exactly it is. That way, the real size of the financial sector will be known. Right now, it's bloated. You see, looking at the Nigerian economy from an aggregate perspective, there are three major subsidies. Subsidies are distortionary to allocation of resources. There are three major subsidies in the economy, and subsidies fuel and actually benefit the elites. So both of us here are beneficiaries of the subsidy system. So in trying to eliminate or reduce subsidies, we are going to be affected, but so be it. The reality is that the three subsidy pockets in the economy, and there are more than pockets, there are buckets actually. One will be petroleum consumption subsidy. And if you look at it and strip it out, you find that the subsidy, maybe 20% benefits the people, 80% benefit the providers. That is the scam, the cabal that
the clique.
Then there's another major subsidy, which is the interest rate subsidy. The interest rate subsidy means that government puts money into the system and government borrows from that system. Yeah. So the cost, by putting money at maybe 9, 10%, 11%, and borrowing from the system, by the time you add everything at about 18%, you're actually giving money to people.
Subsidy to the banking system.
Absolutely. You're subsidizing the banking system and the shareholders of the banks and everybody and all of that. That's an unnatural situation which will go. The third subsidy, which is also fundamental, is the exchange rate. An overvalued exchange rate is a subsidy. So what you have is a price discriminating monopoly whereby you sell dollars at the auction, you sell dollars in the interbank market, and you sell dollars on the street. The same dollar, the same color, but different prices. Therefore, price discriminating monopolies are just avenues for what we call financial osmosis between one sector and the other. And so those three subsidies will have to be addressed. But the important thing is that when you take away distortions from the allocation of resources, economies become more efficient and therefore more productive. And that is the issue. Do we want to maintain short-term euphoria? You see, it's like, it's very similar to addiction. The man takes cocaine and he has temporary illusion of happiness for 1-2 hours. After it wanes off, he's looking for either more cocaine or he goes to kill himself. So the Nigerian financial system, the Nigerian economy, the Nigerian people, the Nigerian government have built their entire macroeconomic structure on subsidies. Subsidies in the interest rate subsidies in terms of the financial system, exchange rate subsidy because of the consumption pattern of the Nigerians, and petroleum subsidy again. There were other subsidies like in fertilizers and all of that, but there are others.
Those are the core.
These are the three distinct subsidies which, if addressed, could mean a fundamental shift in the economic structure of Nigeria.
Excellent. Let's take a short time out. I'll be back with Bismarck, and we'll look at one of those key subsidies, the exchange rate one, and try to discuss CBN policies in relation to the exchange rate. We'll be right back.
Who knows Abi better thing? Abi who know like better thing? All these fine things where they see so. Now money government they take do now. Abi, I think it's like, excuse me, I dey pay my tax. I dey do a thing, I dey pay my tax. Say you don't pay your own tax. If you pay your tax, I pay oh.
Pay your tax. It's your civic responsibility. It's your duty. It's the law.
You're welcome back. It's the Policy Council, and my guest is Bismarck Rewane, the Economist, and we're talking about CBN policy in relation to exchange rates. The CBN is fighting a war, a financial war, trying to defend the value of the naira, its chosen value of the naira. It has reverted from the wholesale Dutch auction system to a retail one. It has banned the dollar importation of dollar cash. It has essentially delicensed several bureau de change for. So essentially, the CBN is really fighting to preserve the value of the naira. And even its war on the CRR side is linked to try to curb demand for dollars. What do you think they will win that war? Either in the short term or in the medium to long term?
Let's look at what is the problem. The problem is that the central bank's mandate under the Act is to preserve the domestic value of the currency and also protect the external value of the currency, including external reserves. It's not broader than that. Therefore, the Central Bank Research Department and the Central Bank MPC and the Committee of Governors look at two things. One, the marginal propensity to import and the marginal propensity to consume, the marginal propensity to save. Typically, what you don't consume, you save. What you save, you don't consume. Now, the marginal propensity to consume in Nigeria is like 0.9, if not almost. So people consume almost everything.
Almost about 1%.
All right. Now, the marginal propensity to import, on the other hand, is about 0.63 or 0.68, which means that for every naira you spend, about 70 kobo has an import content directly or indirectly. Having said that, so you ask yourself, if you want to alter people's behavior and their consumption function, what are you going to do? If you alter interest rates, only 10% of total income will be affected. So people will, that 10%, they will increase their savings from 10% of their income to maybe 15 or 20% of the income. That's 20%. But if you alter the exchange rate, you alter about almost 70% of their import content. So the exchange rate has a greater impact on people than the interest rates. Not only in terms of the quantum, but also in the time. Now, that is the objective. Now you are responding to a situation that you have. But the central bank's role is not just only tactical and responsive, but it's also strategic. Do you want to continue to make your economy uncompetitive by having an overvalued exchange rate? And if so, if not, how do you want to go about it? What's your plan and what's your program? So the way to handle this thing normally is that is why we find in most advanced countries, the minimum tenure of a central bank governor will be at least 8-10 years. Because it takes a long time to actually effectively and strategically change. It cannot be this is not a INEC election. This is about altering behavioral patterns in a highly dynamic demography of Nigeria. And therefore, you can play with mirrors, like banning the BDCs, doing this and all that. The typical transition is that you go from a retail auction to a wholesale auction to interbank to full convertibility. You don't go backwards. When you start seeing what we call ideological backsliding, when you see that, then you begin to wonder what's going on. In 2008, for example, we had the same situation. Oil prices were low, we were under pressure, Soludo was the governor, Bureau de Change A, B, C, all sorts of things. We tinkered around with an overvalued exchange, and by November, we moved down to 118. No, from 118 to 130. Then the market wasn't satisfied. We now moved to 164. The thing about overvalued exchange rates is that it's like gangrene. You make that decision to cut the toe. If you don't and you waste time, it will take the ankle. If you don't do it, it takes the knee. Now, if you do it early enough, the adjustment is only small. So there's a minor adjustment if you do it in good time. But it's time to sit back and think about the fundamental issues that face this country. Do we want to remain an oil-dependent economy? If so, if not, then we've got to start making our other products competitive. To make those things, and the exchange rate alone will not make us an agricultural exporter. There are other things that have to be done. So they have to complement one another. And so my view is that for now, the central bank is doing all it can to protect the currency and to maintain its own mandate. I think in the final analysis, and again, we are in an election cycle, so it becomes politically inexpedient to make the people uncomfortable by making an adjustment of one of the subsidy elements. So there are three subsidy elements we discussed. One, the exchange rate, I don't think they will touch that. Petroleum, we tried that one. Petroleum, we won't touch that. The interest rate one, we took part of it, and we're stopping there. So nobody wants to do the unpleasant, or what we call the inconvenient truth in this election cycle.
We'll be right back again. I'm enjoying this conversation with Bismarck Rewane. We'll be right back. You're welcome back to my final segment with Bismarck Rewane. We're exploring the Nigerian and global economy. Bismarck, let me ask you one question, which I don't want to forget. We have the aviation policymakers intent on recreating a national carrier, they call it. I know you do a lot of work in this sector. Do you think it's a fruitful venture? Do you think this will work? Or is it even desirable?
I think the term national carrier is not used anymore. What we have is called flag carrier. The flag carrier is the dominant airline in any economy or any nation, and it allows you access bilateral air service agreements. But you see, the world has shifted from bilateral air service agreements to open skies and conventions. The world has moved away from government-owned airlines to privately owned airlines. However, because the aviation industry is very critical to economic activity and critical national security, the governments have more than an ordinary role. So that industry is highly regulated for safety purposes, for security purposes, but also its business model is based on it being able to be efficient. Efficiency, if you take an efficiency factor and take the government on one hand and take the private sector on the other, it's quite clear that private individuals are more efficient because they have more to lose than the government. The government has taxpayer money as its base, as its capital. So,
or in our own case, oil money.
Right. Philosophically, it's not just viable to have a government can promote a carrier, but the aviation industry is divided into its policy, its infrastructure, and its operators. The aviation infrastructure has, because of its inefficiency, increases the cost of the operators, and therefore the operators are not viable. So what do the operators need? The operators need a lot of capital. They need the infrastructure to become efficient so that their cost level is, and they need policies that will protect them from undue, unnecessary competition or some other things. So trying to have a national carrier may be a very difficult way of trying to achieve something which is quite simple. What we need is a flag carrier. What we need is capital and not debt. Or if there's debt, long-term debt at kind of subsidized interest rates. However, there's a fundamental issue is that how are we going to differentiate between funding requirements of the airlines and the capital requirements of the airlines? The funding requirements are huge, but the capital requirements are even much. The need for equity is beyond question. But who's going to put equity into an industry where the infrastructure, the government-provided infrastructure, actually negates and works against the principles and the competitiveness of the industry? Therefore, for example, you need to concession all the airports. You need to concession them so that
be more efficient.
If out of the 4 airports in London, two of them are concessioned to a Nigerian managed entity and they're doing very well, i.e. City Airport and Gatwick Airport, the other Heathrow and Stansted, and they can do well, then what does Nigeria need? Do we need to do an open bid process and to invite those guys to come and run the airport, at least 1 or 2 of them, to make them efficient? We can't continue running the aviation infrastructure.
So policy is moving in the wrong direction with this.
Well, but in an electoral cycle, policy becomes recessive, politics becomes dominant. So after the election, then we will come back to the issues.
Let me ask you about politics. We have got to that point. So we're not partisan. We don't want to be partisan. So we have PDP, we have new PDP, we have APC, and we have 2015 approaching. It's looking like war formations. And the scenarios are looking like war scenarios. How do you think? How is it shaping up in your view?
I think it's healthy. I think that after almost 50 years of military rule, the culture of democracy, the culture of negotiation, the culture of consensus building does not come overnight. So what you are seeing is that what Nigerians call crisis is what we call political disagreement. I just told you about the U.S. theatrics. And the Nigerians are now beginning to learn to negotiate that you can't get everything. It's not a zero-sum game. And I think it's healthy, and I think it's beautiful that we are going in that direction. I do not make political disagreements synonymous with crisis, and crisis synonymous with disintegration of the federation. No. I hear people say overheating the polity. I don't think that is. You see, a lot of people do not understand that political science is about the study of the struggle for power, while politics is a struggle for power itself. What is fundamentally troubling is behind this political discussion or struggle for power, there are some security issues, both in the northern part of the country and the southern part of the country. Whether these security issues are proxies for the political beliefs and ideologies is another issue. One cannot link that, but it is something that the political class have to come out and dissociate themselves from whatever security issues that we have.
Fantastic. Well, food for thought for those who are listening. A word is enough, as they say, for the wise. Bismarck, thank you very much for coming.
Thank you.
We'll be right back. I have a few takeaways from my conversation with Bismarck Rewane. One, the global oil markets are changing in ways that may not be exactly favorable to producer and dependent nations like Nigeria. Two, the U.S., its economic fundamentals, its competitive position are still far stronger than its political drama suggests. In Nigeria, the CBN is trying to win the banking system of an addiction to public sector deposits. That process promises to be a process of difficult adjustment. And in relation to exchange rates and to the foreign currency market, the CBN is fighting a war in defense of the naira that it is not likely to win, and that perhaps it is not desirable that it should win. Finally, on a slightly reassuring note, politics, political disagreement and realignment and adjustment and even tension is not equivalent to crisis. Thank you very much for watching. See you next time.